traders at UBA expect liquidity conditions to relax further ahead of coupon payment and bond maturity inflows. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for more market updates and the likely outcome of today's 132 billion T-bills auction. Chuka, thank you so much for taking the time out to join us today. Now, I know that the results are not out yet, but I'd like us to just, I'd like you to share with us your expectation, market expectations around likely or possible subscription levels and the stop rates that we could see emerge.
Okay, thank you, Esther. Like you mentioned, results are not out. My expectation is that the yield will decrease. We expect to see between 11.5% and 12% on the longer end. It's all boils down to liquidity. Today, 185 billion came into the market of coupon payment. Then tomorrow we have well over 800 billion coming in as a bond maturity. This will help decrease liquidity issue we've experienced over the past few weeks.
All right, so let's go back then to market trading action today across the yield curve. What did you see?
Yeah, it's been a quiet market, but with mixed sentiment. We've seen the one-year bill printed at 14.7, trading around 10.2. On the bond side, we've seen a lot of interest on the 2050, 2049 bond. It's quite attractive bonds, and especially very attractive to the PFAs. So this has actually been what has been happening in the market, and then we hope to see more robust and more active participants in the market within the next few days.
As always, Chuka, I'm always trying to get into the head of the investors at the market in terms of the investment play, how they're reading the market, how they're reading external news factors that impact the market, especially inflation. I know that interest rates are increased this year, especially on the U.S. side, doesn't necessarily impact our markets, but I know they still keep an eye on that. So just help us get in there. How are the investors? How are they thinking about playing this market, especially with the new administration coming in and borrowing, etc.
Yeah, investors' sentiment is on the positive side, especially with the incoming government. The president-elect, just like other candidates, are on the bullish side of things. So they obviously will make the economy more robust. So investors are more excited, if I might use the word, in terms of what the new administration will bring on board. We heard the president-elect talk about improving power supply. That's an area of interest that has actually hindered a lot of development, especially on the manufacturing side. So it's all about excitement, going into the swearing in and then into the first few months of the administration to come.
All right, that's great to hear. So let's talk about, the forecast for the rest of the week. And I also wanted to talk about the FX market. Still quiet. What are you seeing happening there? We did see some slight appreciation of the Naira.
Okay, Esther, I'll just take the forecast for the week. The forecast for the week is that the market will continue to be bullish. Between today and then Friday, we expect well over 1 trillion into the market. And this huge liquidity will be chasing a few instruments. So we see a huge decrease in rate, on the T-bill side and as well as on the bond side. On the FX side, the Naira has been pretty quiet. We've seen the Naira hover around 462, 463 levels. So it will continue at this rate going into the second quarter proper.
Let's quickly, I wanted to just quickly squeeze this question in. Lending at the CBN window for short-term funds. What can you tell us in terms of the trends you've seen in the last 60 days?
Yeah, it's remarkable how the market can change, over time, because liquidity has been a major concern over the past 6 weeks. we've seen the system in repo of between 350 billion to 500 billion every day. But like I said earlier, today and till end of the month, we see a huge liquidity coming. Already we've seen part of it over the week. On last week, Thursday, just before the public holiday, FAC came in, well over 450 billion entered the market, and is still in the system. We also saw 185 billion coming today and coupon payment. And of course, that will also ease the pressure on the liquidity. And so we see rates drop below 10 levels, 10.5 levels, coming from as high as 19.5 levels.
Right. Thank you so much, Chuka. We'll leave it there. Thank you for talking to us today. Appreciate your time on the show. Chuka Nwachukwu, Head of ALM and Balance Sheet Management at UBA, taking us through trading at the fixed income and FX markets here in Nigeria.